One of the principles of markets is that um, difficult periods are typically followed by easy periods. So you have a period where markets are choppy, going sideways or going down, hard to make money. Once that phase ends, then you get a trending period where it's easy to make money. And the goal of any trader is to be able to recognize what phase of a market you're in. When you're in a difficult, choppy, or downward period, that's the time to be patient, sit on the sidelines, control emotions, and just wait for the trending period. The problem is that many traders, especially novice traders, amateur retail type traders, they are unable to control their emotions. So when a market is in a choppy phase, they want to try to force trades into that choppy period. And of course, what happens is they usually just get eaten alive, and they lose money on both sides of the market. They're not able to make money on the long side because the market isn't trending. It's not producing any sustainable upward moves, and then they also are not able to make money on the downside because typically markets that are in decline have violent counter trend rallies along the way that knock you out of your shorts. So, when a market is in a difficult phase, usually the best strategy is just to sit on the sidelines and wait for that phase to end and the trending phase to begin. And the problem is that especially if the difficult phase lasts quite a while, emotional retail type traders start to assume that that's normal, and they become gun shy, and then they aren't able to adapt when the difficult phase ends and the trending phase begins. So I'm going to show you the stock market right now, and I've mentioned this in several of my previous videos. I think we're in a T1 pattern. This is the first leg up in the T1 pattern, roughly 6,000 points, give or take a little bit. And then we've got this midpoint consolidation. This is the difficult phase. And then now we're breaking out of that consolidation. For me, once we actually got in back here, when this daily cycle ended, this was our entry in here. But once this breakout occurred, and I noted this in some of my previous videos, this triple top here, we get the breakout on the fourth attempt. We get a mild retest of this consolidation zone at what appears to be the last daily cycle low. It was kind of a one and done affair, and now we're off to the races. So the environment has changed. We're now in a period where it's easy to make money, but many traders I'm watching this in real time. Many people are trying to pick a top. So when they should have been cautious here, they weren't. They were constantly trying to find a trend when there wasn't any. The reason being is because they had been conditioned by this strong trend to expect the market to only go up, and then that easy trending phase gives way to a difficult sideways phase. Traders, still locked into this mentality, they end up losing money because we're in a difficult phase where it's hard to make money, where they should be just sitting on the sidelines, and they're not. They're trying to trade this choppy phase. And then as this choppy phase progresses, they become their outlook changes 180 degrees. They go from expecting only upward price action like they were here to expecting only sideways and difficult or downward price action here. And so they're not able to convert to strategies that take advantage of a trending phase that we're in here. Now, I think that, as I said, I think this is a T1 pattern. First leg about 6,000 points, midpoint consolidation. Second leg should be about 6,000 points. So I am trying to get subscribers to just hang on to their long positions. Yes, of course, there are going to be dips along the way, but they're not dips to be avoided. They're dips to add to positions or maybe convert some unleveraged positions to leverage. And the time to get defensive, it would be once we start to reach that 6,000 point target that this pattern would project to. So somewhere between 17 and 18,000, that's kind of where I would expect a top to occur. However, I'm pretty sure we're in a final bubble phase. So the last month of a bubble, the melt up phase, as the retail public really starts to pile in, can add, no, it can get crazy. And so it's not out of the question that we could go past that T1 target of 17, 18,000 and maybe go to 20,000 or even higher before this is over. The final month of a bubble can get extremely crazy. So that's not out of the question, but I'm, as long as nothing wrong is happening, then I don't want to try and second guess myself and exit early until price at least gets to the target zone of this T1 pattern. And like I said, that's at least 17, 18,000. So now let's go to gold. And this is, gold has been, a perfect example of how this, these inexperienced amateur traders make this mistake. So, we get this huge first leg up. Well, not necessarily first leg up, but an intermediate cycle, intermediate rally, and especially this last phase. This was, almost a melt-up phase. This conditioned everyone to expect only higher prices, just like the first rally of that T1 pattern in stocks, and then we get the initial shot across the bow that we've started an intermediate decline. And the problem is, and I've watched this with comments on my premium website on the nightly reports, a lot of people they get this mindset ingrained that this big powerful rally means that the intermediate correction is going to be short, sweet, mild, and it's not going to be long before we take off to the upside again. So they're trying to pick a bottom to an intermediate correction, already in here, and it's too early. And then, of course, we get another leg down and we make a slightly lower low when we hit this 1850 support zone. And this is the point at which the people that were trying to pick a bottom too early, their hopes and dreams get dashed with this lower low. But it doesn't, at this point anyway, we don't really get that bloodbath phase that typically finishes an intermediate decline. So we get another bounce. So they're ready to try again in here. And it just doesn't really get any upwards momentum here. Now we did get a fake out right here. We made a higher high. This was a daily cycle low, so this did have the potential to be a bottom. And actually, I think it would have been a bottom if we didn't have to deal with banker manipulation in the metals market. So we gave this a shot when price came out of this daily cycle low. Now I'm going to put the 100-day moving average in here because this was important. So anyway, we gave this move a shot, and then we put our stop right here at this 100-day moving average, because if this was a final intermediate bottom, then price really didn't have any business going back below this 100-day moving average. So our stop was here. So even though we got faked out by this move to a higher high, the bankers weren't able to get a whole lot of money from us. We just stopped out quickly and got back on the sidelines. Now we are so late in the intermediate cycle at 37 weeks. The odds are very high that this is a final bottom. But the problem is that all of the people that wanted this rally to continue quickly, they got frustrated, they gave up, they canceled their subscription, because they couldn't control their emotions, and they couldn't understand that we're still in a difficult phase. But I think that has now ended. I just don't think that we're going to have another full daily cycle before this ends. So I think this is the bottom, and we're riding this rally. And I think now you have to convert to strategies that work during the advancing phase of an intermediate cycle, and probably um, strategies that will take advantage of a strong trending move. And the problem is that the people that didn't get what they wanted here, and they became frustrated and they gave up. Now all they can see is lower prices ahead, and they're not able to convert and adapt to a market that is now transitioning into uh, a trending period where it's easy to make money. So they're going to sit on the sidelines and probably miss most of this rally. And this just happens at basically at every intermediate bottom, and it happens during every intermediate correction. The people that are not able to control their emotions yet try and force trades into these difficult periods, and then when the difficult period ends, they're not able to, see that the market has changed and adapt to a period where the market is trending and where it's now easy to make money. So now I think because central banks everywhere have just printed trillions and trillions of dollars, I think it's going to power a bubble phase in stocks. I think it's going to power another leg up in gold. I think it's powering the baby bull phase in the commodity sector in general and in energy in particular. So I think all markets, gold kind of being the laggard here, but I think all markets are transitioning into a period where it's easy to make money. And unfortunately, many people that have gotten frustrated during these corrective phases are going to stay on the sidelines, miss the move, try and pick tops way too quickly, instead of recognizing that we're coming out of the difficult periods and we're now moving into easy periods where you can actually make some money in all of these markets.